Good morning, everybody. This is Brian Caprice, and I'm going to be hosting our Monday morning market breakdown today. For those of you that have been with me in the past, you'll notice my voice is probably a little bit deeper again. Lacrosse on the weekends is always fun. Yesterday was a real close game. We took one win, one tie this weekend, and needless to say, my voice goes in and out. I do apologize. For those of you that are new this week and don't know me, I'm an instructor over at Major League Trading, and I'm also the co-founder of Major League Forex. Today, we're specifically going to talk about and focus in on currencies. I've been trading since the tech bubble, so I've been through some ups and downs. Whenever I see the market kind of doing what it's been doing lately, and I just kind of, you just kind of shrug it off. I was actually was a financial advisor for a few years and worked for one of the big three. So, I've seen crashes, I've seen what people are being told, and I decided that for me, education was the best kind of route, and I wanted to start educating people. So I've been doing this for about 10 or 11 years at this point. I've created a couple different courses for Major League Trading and Major League Forex, the 30-minute trader, 5-minute binary courses, basically for traders that don't have a lot of extra time. You guys can see the family here. I have twin boys that are 8, they'll be 9 in 2.5 weeks, and then I have a newborn. She's just over 9 months right now, talking, crawling. So needless to say, a lot of things going all at one time. I don't spend all day sitting in front of charts. And a lot of my trading strategies and the way that I trade are based off of really setting and forgetting, or basically leaving and using technology to help me through trades. And it's just what I do. I've traveled through the United States and Canada helping traders. Different people have different problems in different locations and different things they have to overcome. So it's another one of those things. I try to keep things, and my mentality is to keep things as simple as possible. If you guys have ever heard that, keep it simple, stupid, that's definitely me. I love to keep it simple. I love to not overcomplicate things. What I find in helping people for the last 10, 11 years is when you overcomplicate things, that's where you make your errors. That's where you make the mistakes. It is what it is. I find when you keep things simple, you keep the basics, keep the fundamentals in there. Fundamentals not as in, trading, but the fundamentals as in the basics that we learned in the beginning of our trading career. Those are the things that help you get ahead, and that's what I'm going to cover today. All right. So let me cover the risk disclaimer real quick. Now, Nadex, trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only, and should not be considered an offer or solicitation to buy or sell any financial instruments on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility, and past performance is not necessarily indicative of future results. Now, Nadex contracts are based on underlying asset classes, such as Forex, stock indices, futures, commodities, and economic events. Now, understand this, trading can be volatile. Investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures that investors cannot lose more than the cost to enter their transaction. Nadex is subject to U.S. regulatory oversight by the CFTC, and I always highlight this last paragraph is really the most important to understand. Unlike a lot of other things out there, the cost of getting into the contract is the most that you can lose on the transaction, particularly in the environment we're in right now with a thing called Brexit, if you guys are familiar with that. That's been dominating the markets the last couple of months, especially basically last month. If you're out there on the hook and you don't understand how to use stop losses in asset classes like futures, even Forex, you can lose substantial amounts of money. But having something like Nadex that has a fixed risk and profit potential in every single trade, it's a very big plus. So if you guys are new to Nadex, welcome. And again, great place to be in your trading career. Even if you are a futures trader, my opinion is Nadex is really a great place to be. Okay. Let me dive into it. Now, every week, what I do is I will pick out the top 3 news events, the ones that we should focus on. This week, they're a little bit, more kind of, I'd say, later in the week. We have final GDP for the U.S. on Thursday. And again, later in the week, there'll probably be some market mix-ups early on, but this is probably going to be a big one. The current administration has been very big on kind of saying that for lack of a better word, the stock market is a gauge of our economy, but GDP is really the true kind of the truth, the true piece of it that you can look at of how good our economy is actually doing. And large numbers were thrown up last year, and everybody said that it's not possible for it to continue this year. We'll see. So GDP, having the final GDP number is a big one. There's always some adjustments, and that'll be on Thursday. Now, on Friday, we have the tentative Brexit vote. And yes, again, last week there was Brexit. This week there was Brexit. This one is important because this is basically talking about the Brexit extension. Now, the EU is already prepared for a no deal. The European Union is so much farther ahead than London at this point. as far as what's going to happen, what's not going to happen. Now, understand Brexit. Basically, right now it's just a political mess. If you guys are keeping track of it, it is dominating the markets. It has the ability to move the pound 150 to 180 pips easy. In the pound dollar, the pound yen can move even more than that. You can get 250 to 300 with Brexit news. But understand at this point, literally all they're doing is trying to destabilize themselves politically. It's just it's an absolute battle in there to get May out and get your person in. And again, it just basically hurts everybody. It's gotten everybody thinks U.S. politics is dirty, but UK politics is probably worse. And they're literally going to hold us to the last moment. And in fact, I think they will extend it just so they could fight more and destabilize everybody more. And again, I just think they're going to literally hold this decision until the last possible time they can of how they're going to do the exit and what the specifics of it are. But there is a vote Friday. I had this ranked as number 2, but I actually don't think this one will be as big a mover unless it's voted not to extend and it's going to be, just the release. We'll see how that one goes. But I'm sure we'll hear news up until that time this week. There'll be kind of, pieces back and forth. I believe there's a vote later on today as well. But people are at this point are getting so exhausted of votes and the volatility that's associated with those things. We'll see how they go. But again, you got to keep Brexit up there on the top 3. And the last one's Friday at 8:30. Brexit is considered tentative because it can come in at any time. A lot of times they're later in the day, although Friday's always a weird time for that. 8:30 in the morning on Friday, we have CAD GDP, which is kind of important. Our neighbors to the north, they that currency pair can be pretty volatile, particularly with large news. And like I said, GDP is kind of a big statement of what your economy is doing. There's jobs and people can say unemployment numbers matter, but GDP is really what your country is producing, and it's more or less the single biggest gauge of where we're at. And people are talking about recessions and global slowdowns, and you heard news last week of China slowing down. Well, all these things are big, and we hear if the CAD number is bad and it shows that the Canadians are going into a type of recession, there's going to be some large movement in that currency pair. Okay, so that could be a big mover on Friday. And again, I'll show it on a chart, but that one's worth probably, I don't know, maybe 50 to 80 pips. So that could be a pretty nice mover. Okay. Now, with that said, I always jump over and let me drag this in. What I do is like to show kind of a brief rundown for you guys of what the rest of the news looks like minus the top 3. Now, I'm using a site called Daily Effects. If you guys have not been over there, go to Daily Effects. And on the top, if you go to charts or calendars and charts, go down to economic calendar. What this will do is it'll give you a nice kind of rundown. And what I do personally is I always go over to filters. I uncheck Mexican peso. I don't worry about that. And I get rid of the lows. And what that'll do is it'll take it into my medium and highs only. Also, make sure that you set the time for your correct location. Okay. I'm on the East Coast in New York and Toronto time. And then I also click weekly view. That way I can just scroll down and have to go day by day. And this is going to give me a layout. So you can see early in the week, we have a lot of medium reviews or a lot of medium-based news. Tuesday morning is when we start coming in with consumer confidence index. And there will be some movement around that one. I wouldn't say it's top 3, but typically, that's the first big US news release. And you'll see there's a lot of things clustered. Housing starts. And again, for the most part, housing starts, building permits, those things. These numbers actually haven't been great. You can see they're already picked to be negative. But consumer confidence is a big one because unlike GDP, which is an actual read on the number, when you start talking about consumer confidence numbers, that's kind of what the people think is happening. Okay, so that's pretty important. And you'll see that number around 10 a.m. on Tuesday. This is another one. This New Zealand cash rate, although it's not picked to be a change, this is going to be a more of a nighttime. So if you are busy and you have a 9-to-5 job, you can get on at night and trade New Zealand in currencies. Unfortunately, there is no Nadex pair for that one. But sometimes you will get some movement in some US-based pairs, or even the Aussie dollar will move because of New Zealand language. Now, President Draghi speaking on Wednesday morning. This should be interesting, and he's basically like the guys in the European Union, or the European Union has actually already approved an extension right up until their elections. They're like, yeah, we can approve it till the end, and then it's somebody else's problem. But he's probably going to say something that's pretty interesting, and it'll most likely be Brexit focus as well. On Thursday. Here's where our GDP comes in. And again, GDP is expected to be, a little bit less, right? Coming in at 2.4. Originally, all we were talking about was 3.3. Now we're starting to drop to the lower side. So we'll see. There'll be a lot of talk about what this number actually comes out to be. Again, a little bit of a consumer price index at 9. Then we have a lot of Japanese news, jobless rates and things like that at night. Not expected to be really too much in here, but again, there'll be a little bit on Thursday night. Going into Friday again. So Friday is when we have the tentative Brexit vote. It'll be sometime during that day. They haven't released when, most likely later in the afternoon, but starting early in the morning, you're going to have unemployment changes in Germany. If you guys didn't know, Germany's numbers basically dictate what happens with the euro. They are the strongest and largest economy over there. You start getting unemployment changes and rates that are not good, this will absolutely hurt the euro, send the euro-dollar currency pair kind of collapsing down. Again, this is one that's pretty good to watch, but again, I think for most U.S. traders, CAD GDP is going to be a big one. And again, it looks like it's good versus the forecast and everything, but like I said, there can definitely be a surprise here. It's not the largest thing in the world. And that's kind of it. And then University of Michigan consumer sentiment. This can also be a bit of a mover, although it's coming in about where they expected. So nothing too big. For those of you guys who don't know as well, if you're using other sites like Forex Factory, theirs is different as far as the layout. This one is the previous is the right, and the forecast is the center. So for example, when I said it's you don't expect a lot. Here's University of Michigan consumer sentiment. Its previous was 97.8, and they're expecting it to be 97.8. So not a whole lot of movement here. All right. And again, new home sales. If you are trading the indices, this will move the indices a bit, but it doesn't really affect the currency market too much, and that's what we're focused on. Okay. All right. Let's go over to charts, and we'll see what kind of setups we have over here. All right. So if you guys have been following for the last the couple of weeks, we've talked about that we've had this channel formed. We have this upper side sell, right, which is a really nice zone. It's bounced off of it a few different times on the daily. And this is the Aussie yen. It's the first of the Nadex currency pairs. And you'll see we had this bottom section, right? We'd hit the area before, right? And again, if you want to talk about kind of, how many times we've bumped, so we've hit 1, 2, 3, and now this is our fourth bump through. The zone is actually slightly lower, but I had this one marked off because of the way that this was formed. And that's kind of where we're at right now. We're sitting in this zone, and it's the very, very bottom of the channel. So there's a couple ways you could trade it. One of the indicators that we use is this kind of in the upper right-hand corner. It's basically a trend following kind of pullback locator for us. And what it's saying is we have a downtrend with a setup, and we also have a downtrend set up with a lower time frame. Here's the problem with this. Typically, you don't want to be selling when we're in an area of buyers. Now, we've seen this area hold 3-4 times at this point, okay? So as this price is rallying back up again, right, a lot of times we'd be looking for an area, at least on the 4-hour, to sell to head back down again. A little bit risky. You can see over here on the 30-minute, there are a couple areas where things are bouncing, but for the most part, there's not a whole lot of stoppage. There's what we would call a wick over wick, which is a formation that we use a lot, but really the trade would have been on the gap. As the gap broke, came back up and touched, and then continued to collapse down. Right now, I'm kind of in the holding pattern for this one. I either want it to break below this zone, and again, I could continue this zone out to the side. We could bring it all the way out to here, right? I need to see a nice break below, but really before I'm thinking about doing much. I probably won't take this long. I just don't think there's enough up here. And again, if I miss the trade, I miss the trade, but I'm looking for a higher quality trade than what we have. I still have my eyes on this lower section down here around 75, this gigantic wick that we saw. Actually below this zone, really starting at 77.00 is where I'm looking to take what I would call a racetrack, and then kind of a pause before we go all the way down. So a lot of potential in this one. And again, I would love it to break this zone and come back and retest, and that's when I'd be looking to take some shorts. This is not one you can trade with touch brackets, unfortunately. But this is something that if you like this weekly, there's a couple things you could do. There are out of the money weeklies, higher up here that you could take with, 4 days to go. You could also kind of front run the, sell to the downside. Right now, I don't think either one of them has a higher potential because right now it's more or less in a sideways holding pattern. I'd say give it, an afternoon. Let's see what happens when U.S. traders get in and see how the yen reacts to it. That would be, I think, a smarter play for this one. All right. Let's jump down to its sister pair, the Aussie dollar. Now, Aussie dollar, again, is related to gold. This one was in a 60-minute long-term trend, and I mentioned last week that this one was probably going to break sideways. It actually broke through the bottom. It was actually clean. I thought we would just get one of these kind of sideways breakthrough, but we got a nice push down to the bottom, but it ended up coming all the way back up and retesting through. Now, we are a bit lower, interesting place on this one. I have had, again, had this large area marked off and pretty wicky, right? You know, this candle, this green candle right here, really not much direction, followed by basically nothing but a wick. And then we got a little bit of selling pressure, okay? It's bouncing off of a gap. Okay, there's a gap. You can't see it because there's actually a candle here. There's a bit of a gap, and that's what we bounced off of. We do have an area of basing, but none of them are really great. Last week I was talking about I needed to see it. If price got a little bit lower in this area, then I would be looking to kind of sell, but we missed it. It ended up gapping up. It just ran completely away before pulling back again. I'm going to remove these two lines because at this point, I'll keep it for a little bit longer just to see if we pull back up to hit this area and go lower, but I don't think we'll go too much higher than that. Actually, I will delete them. This is kind of what I'm looking for on a nearer term trade. Level basing in this area. See if we can get just a little push higher before heading back down. And again, this one is US based. When US traders come online, there will be some movement here. And this is one that anytime we mention China, you'll see movement. Anytime you mention gold or inflation, you will see movement in this pair. And typically anything that's, you know, bad US wise, you will see movement in this pair. Okay. Similar situation. I still do have this large sell side at the top, so it's a bit far now. We're talking about, let's see, 134 pips before we get up to the really strong selling area. It only has a 54 pip ATR, so that's going to take at least 3 days or some really, really big news and a parabolic candle. If we do get a large burst up like we had in this candle, then I would be looking to short, turn it back down again. But for the most part, I think this will probably start to try to go sideways and grind down into this ISCA 70 level. Again, similar situation. I would like it to break this zone here, come back and retest, and then that's when I'm looking the short is on the retest. Okay. Again, not a touch bracket pair, so this would be something where you do, a little bit longer term. I don't love anything on this one today either. All right, next pair would be Euro Pound. Where is it? There it is. It was in the middle. All right, so Euro Pound. This is definitely obviously a Brexit related trade. It's going to bounce all over the place, back and forth again. You can see last week, again, we've talked about this before, we had this selling area and price ran into it. It shot back down again. It went back up, went all the way back down to the buying area, went all the way back up to the selling area, went all the way back down to the buying area, and then started to do the same thing. Okay, it went a little bit higher. It breached into this kind of zone over here that we had talked about. These are from a different thing that I was doing. I'm going to keep this one marked off though. But you can see we've gone back down into kind of a lower level basing. If you take the basing level here is kind of what we ran into. Before we didn't have any below. It based sideways, went up, popped, and instead of taking this green zone out, what it did was it took this level right here of basing. You guys see it? Price came down, we had an impulse, we had a little corrective move, impulse, and then it based. And then it exploded to the downside in the parabolic candle. And that's when we had all these problems, right? And this was a prior zone. Now we're at the upper low. We finally burned that entire zone out, came back up, and now we're based. So what I would do is I would move my kind of alert lines, I guess, if you're going to put your alert lines out there. Grab an alert line and throw it up at the 8660 area. Okay, that would be, depending on the software that you're using, a lot of times you can set an alert and have it email you. I would have it email me if we breach this zone again, just in the spacing area as another potential sell point. Now, understand this pair has an 86 pip ATR, which is a bit high. It's a bit inflated because we've had large candles. Use this one. I don't trade this one as often as I trade the other two, but I use this one as a gauge of who's stronger, who's weaker. Okay. Things have been pretty violent. Like I said, there's not a lot of wicks in this. It's been straight up, straight down. You guys can see straight up, straight down, more or less in here. Again, bouncing off, predefined zones. I mean, it's doing what we thought it was going to do. Right now, if looking at this chart, so I do like it more to the upside. Let me see what we have going on. Yeah, it's a little bit ugly. It's a pretty big pullback. One area I'd be looking for on the 60-minute is watch this 8622 area. You guys see this big drop down and then this sideways movement with basically a wick up top and not much here. That's a pretty nice little area. Nice little area of sellers in there. So when this comes down, mark this area off of 8622 or 8620. If price rallies too much higher, it could be running this to turn and flip to the downside. And that would also coincide with what we have going on right here. You guys see this wick over wick? It's definitely a potential sell area. If you're long, watch out for kind of that area in there, okay? Actually, I could go here, but so watch out for that one. Right now, between these two, I wouldn't say either one of them is very strong. It is Monday morning. We have seen over the last 12 hours, basically the euro pushing up, basically a weakening of the pound, which isn't surprising. Like I said, with a pound vote today, there will probably be a little bit of movement, although I expect not as much. We're not going to see what we had over here over the last week. But again, if we do break that current basing area, remember the buy zone is down here at 84.80. All right. Let's drop down the euro yen. So euro yen did have some movement last week. We had marked off, if you guys remember, I had marked off this area, and Friday we blew right through it. We talked about we had a basing. We had here's the more or less what we had before, right? We had the down, we had a basing level, and then we had an explosion out of it, and that's where that level was formed. And we could see all these wicks kind of tickling up into the base area. And we said that we had what 1, 2, 3, 4, 5, 6, 7 days in a row of straight up with no pullbacks. But we started to see tops, and what we started to see over here was again. Selling area was just slightly above. We started to see lower highs, and then right here we started to break prior levels of of basically buyers, right? Levels of support. Once we broke this level here, this had been a pretty strong buying level. There was your trigger to get in, and that's what the end result was. In this case, you're looking at about 189 pips, so quite a large movement to the downside. Now, because it happened so fast, the one thing we're always thinking is about retraces. Okay. Now, this retrace has already started to kind of occur on this one. One thing I would be cautious on, though, is this. See this level right here, this area. Okay, this is an area, again, large movement down, sideways movement, and we had descending wicks, meaning that every time price got pushed back up again, there was more sellers pushing it back down. And then again, we saw this collapse to the downside. So two ways to play this. One, if it just gets a little bit higher up in the 124.90-ish area, if it decides that it does want to push a little bit, that could be a potential sell area. And the selling zone is about 17 pips, so not a bad trade to take on this one. Again, not a touch bracket, but this one can be done in spreads, and it can be done in binaries. In fact, let me look at the spreads on that one real quick. I'm looking for the ceiling spreads to see what they're around. A little bit far. So the ceilings on this one I don't know how many of you guys are trading spreads out there. I look between both. I'm probably equal between my binary trades and my spread trades. And I like the spreads because they trade more similar to the underlying asset, which is, again, currencies is more what I'm used to with movement. And a lot of times I get them a little bit out of the money, and that's just my personal preference. Some people like in the money. Right now, the ceilings on these, though, are 126.70, 125.45, 124.20, which is about 30 pips from where we are right now, and then to 126.70. So they're all a bit away. If we got back up into this range, we'd still be a little bit deep into the 125.45. So this one's a little bit high. I'd wait for, I don't know that I want to go to the top side of this one yet. This is another one of those cases. We do have, there is a, we're already into that. Unfortunately, so if you're not familiar with spreads, the way that we talk about them is we talk about the ceiling being the lower price and then the top being the ceiling. And we're a little bit deep in the money on both sides right now on these. So I'd probably wait a bit. If we do start to get a push higher, and again, we need to get it pretty soon because there's only about 7 hours left in these. If we do push that up into this range, you could probably grab, unfortunately, that's the top, that's the ceiling of the one. Yeah, you know what? I don't know that I'd probably switch over to binaries on this one based off of where we are. So if price looks to push up through this area, I'd be looking for a potential binary out of the money. Something on the smaller side, again, depending on how long it takes to push there. If not, I'd be looking for something a little bit more on the weekly basis. I do think on this one we will get somewhat of a retrace. I don't know that we'll get it in one day, but a lot of times when we get these large explosions in one direction, we will retrace back up. It's, this is more kind of normal movement. Having a candle that is, 240 pips when an ATR is 83, it's quite a large candle. A lot of times it's a very emotional candle based off of news, and it'll retrace back up to where it was before. So there are potential weekly binaries on this one you can get pretty cheap. Just looking at it real fast. I say fast, but then it pauses on me. There are things up in like the 126.25 range, which would be back over here, that don't look bad. Although there's a lot of premium in this one right now. 125. Actually, this one, I actually like the 125.75 personally for me better. Although it's 25 risk, which means you would, can gain 75 if you held it till expiration. Um, that's the best one I have on that one right now. Let's jump down to the next pair. I don't want to take too much time today. Euro Aussie. So this is I'm sorry, not Euro Aussie. Euro dollar. So Euro dollar, we'd marked off this area before. We talked about kind of a bit of a downtrend where it could go in a kind of measured move. You can see on the 4-hour, we had marked off an upper area and a bottom area for targets, and that's kind of where we hit right now. We are in a little bit of a pullback area. And again, on the 4-hour, what I did is kind of the same thing. This top section, price had come down, based, and dropped. Same thing here. Price had gone up, kind of went sideways, and then popped. And it held 2 times. Okay, so this was actually a target area for me to the downside, not necessarily a buying point. And it did. It hit and popped, and now based. So I'm kind of waiting to see what it does. When we talked about this last week, we talked about here's a basing area. We'll see if there's a bit of a pullback. Again, very similar situation to what we had. Many, many days up with not much pullback, right? We had one little day of one little hiccup, but we had 4 up, 1 pullback, 4 up, and then we started to see it running into kind of higher level kind of selling areas, right? So what this is this is dollar strength, price heading to the downside. Now again, racetrack, this was news based, okay? The original racetrack trade was here, and this retraced back down again. Because this one it ended right here, I wasn't necessarily willing to take it yet. I wanted to see some confirmation, and I actually haven't really gotten the confirmation yet for the break. But there is a potential break to the top side here, back up to 113.88. Mondays aren't normally the biggest movers in this pair, although you can get some movement. Just be cautious of that one. But on a weekly position, I do feel that with all the negative sentiment with our market, even though it's, this has been very much dollar strength based, I do definitely feel that we're going to have a bit of a retrace. I think a lot of stuff last week was overblown, and I don't think the European Union, again, if Germany's numbers are very good, meaning that they come in strong, that's, I think, what's going to push this higher. And remember, we have German numbers coming in later this week. So a weekly position to the top side may not be bad. Make sure your binaries are out, though, before you get up into this kind of 114 range. Being a round number as well as being a selling area, it may be a little bit tough to get through, okay? But again, I did have this marked off, basically taking your retrace back down to the basically 112 area. And this line was actually a measured move. If you guys look at the prior measured move here, the prior measured move here, prior measured move here, the prior measured move on this one was back down over into this area, okay? As that's what we're looking for as a target of it kind of doing its ebb and flow back and forth, okay? Again, requires us to break this level, bring back down to here, okay? And right now there's actually a bit more, remember we talked about there was a bit more euro strength than pound. So again, this one is kind of going the opposite. This is showing, near term strength, but overall we're kind of in a downtrend, okay? Let's see, next would be pound yen. So pound yen is always the big mover, okay? Last week, if you remember, we talked about this as well. Let me move this down. So we had marked off the blue area, right? We had talked about the first week of Brexit, and we said if we got an explosion, most likely up, but we could potentially go back down to this base. We went all the way back up to the area, right? We went all the way back down, and we have now completed that full retrace back to the downside, and we are holding. So we have 2 days of really not much movement. You guys can see on the 4-hour chart. It's pretty much just going sideways, right? We took over this area, we retraced this area all back down again. So there was profit here, profit up, profit back down, and now we're basing, okay? Now, today's vote will most likely not send this anywhere. It's not really going to tell us a whole lot. I think later on in the week is, like I said, this week for Brexit, I mean, Brexit always a big thing. This person says this person voted this in. It always has the potential to move. Unfortunately, there's only so much movement that one news event can cause. And I think people are starting to become numb to it. Think of it like this. You guys remember when gas prices hit $4 a gallon, like the first time? And it was like, people were like, I'm not driving anymore. I'm buying a bicycle. I'm getting a moped. And then it went back down again, right? And then, a couple months later, it went back up to 400 and nobody said, or went up to $4 and nobody said anything. because you became numb to it. It's like cold. Same thing as like cold, right? October, November time period, it gets to like 45 or 50 degrees, you're freezing. But by now, at the end of the winter, it's 50 and you're like, I'm wearing shorts. I'm used to it, right? Your body gets numb to it. People are starting to get numb to Brexit, and that's why we're not seeing as much. Again, it's going to take some big news, I think, to start moving us around. The extension vote Friday, I think it has potential, but it's not as much as what we've had already with the failed votes. Unless it fails, unless they don't do the extension, then I think we'll have large movement. Be prepared for that one. Excellent way to play that is obviously Nadex, because our maximum risk going in is what we pay. Okay. Obviously ideal versus just getting in there with currencies to be like, yeah, I'm going to go long this one. Well, guess what? That's very, very painful when it's going against you. So right now, I do like this to kind of rally back up again. I think all this, this yen strength has really been, I don't know that it's this justified. I think price will rally back up and try to get back up into this 147 area by the end of the week. Be careful with this one. Right now, there is a lot of premium stacked into these, obviously because of Brexit. Okay. Not much you can do about that one. But again, if you kind of box this off, and again, it's kind of hovering between this lower side here and this upper side, we are kind of in the kind of standing sideways pattern to start heading back to the top, back up to the 147. So there are potential longs to this one. Again, low risk. Take low risk trades. Don't take anything that's deep in the money where you're risking more than what you can make on it. Okay. All right, let's drop down to pound dollar. Pound dollar is the one that I've actually liked a little bit more. This one did not fully retrace back down again. Actually, this box is a little bit big. It should have been. Got pretty close on this one. Again, same situation where I had this upper level daily selling area. Unlike the last one where the price is on the bottom side, this one is still holding pretty well to the top. Now, this one is a lot wickier, right? By wickier, I mean, look at this. Wick. A lot more wicks. It's not as clean looking, which makes it a little bit harder to trade because there's a lot more indecision. Now, again, if we shrink this up, you can see, again, we've been holding between this upper area around 133.70 and the bottom area around 129.70. Okay, so it's about 100 pip range, or I guess more than 100, 300. 133. Yeah, so about 400 pip range back and forth. This one I do like more to the downside. I don't think this near-term area is going to hold. I would actually move this back down to here. I was trying to take advantage of some of the basing levels here. And again, probably a little bit kind of close. I would use this as our bottom side at this point. We are kind of right in the middle, at least on the 4-hour. On the larger time frame, if we can get a little bit higher, back up into 132.66, I'm going to be looking to take something short to the downside. Looking at the lower time frame, kind of hard to tell because it's basically Friday into Sunday. This is a Sunday movement. Really not a lot of stress, not a lot of direction, not a lot of conviction, right? But if we start to break this to the downside here, we break below this kind of basing level, like this 131.50, I'll definitely be looking to go short on this one. Now, this is another one, as I mentioned last week. If you're unfamiliar with the touch brackets are fun to trade. They are at the very, very bottom, right below cryptocurrencies on your Nadex, your web platform. Of the 4 pairs, it's euro dollar, pound dollar. Okay, pound dollar's had a lot of movement. This one is up to 135 pip ATR. Okay, there are 4 touch brackets, and last week I believe we had one that triggered. And we got to see the reprint. So if you're unfamiliar with it, go over to demo and you can start trading these. Right now with the indicative of 131.87, there's an interesting touch bracket right now if you like it to the top side. Okay, basically the stop out point on the bottom will be 131.60, about 20 pips below where we are now, and it goes up to 134.11. So that's not a bad one to take this back up into that daily zone. To the downside, there is something that's a little bit similar, although it's a little bit farther away. The top side would be 132.61. So we do have a bit more, about 80 pips away. So if this rallies up, right, if this rallies up into this 132 kind of 80-ish area, the start of the zone is 132.57. If we start to get close and you see a turn and it does not breach 132.61, that would be a good place for you guys to start trying out touch brackets in demo mode, okay? Because that would be close to the top side of this one. You take small risk, and you'd have the potential to run this all the way back down to the start of this area. And again, you guys can see this can do this in one day. here would be the bottom of that touch bracket. So if you're not there, write this one down. Look at the 130.11 to 132.61 touch bracket on demo mode. And if you're unfamiliar with it, if price rallies high, look to take that in demo mode so you guys can get practice and learn how to start using the touch brackets, because they are very beneficial trades. Again, a lot of big perks to those, and that would be a place to try it out. All right. Dropping down to the next Nadex pair, we're going to go to CAD dollar. So again, CAD dollar, if you remember, is the number 3 kind of highest potential this week. This one obviously has, a bit of a gap in here. We ran on the gap. We were waiting for this gap. We're waiting for it to come back and fill the gap. Let me bring this back over here. This is in a similar situation on the daily. Okay, we've had 3 real strong days to the top side. Again, CAD weakness. We're getting up to an area though where we do have selling. Okay, our big daily one is all the way up there, but we do have a zone sitting right here. Okay, it would be reddish in color. Template, load red. Be looking at something along those lines. Okay, so I'm looking for a bit of a retrace. You can see it didn't go as high as what our previous kind of gap candle was. This gap was filled. We are waiting for this gap down here. Basically this gap to fill, okay, to the downside. You're looking at about 90 pips to the downside. It does have an 80 pip ATR, so it could technically do it in one day. Monday, not a whole lot of Canadian news today. U.S. traders, again, U.S. trading, Canadian trading is just starting to come online. At 8 p.m., you're seeing futures traders in there, and that's why we've probably seen this movement over the last hour or two. If we have a failure to go higher and we start to push down, particularly if a break of 134, you can take this back down, most likely this 70 pips back down to 133. So this is another one that I'm looking at, a little bit farther out of the money binaries to the downside, risking about 15 on these. There's some nice little setups on this one. This one also is not a touch bracket, so you can't try it out over there, but there are some spreads. Last week, the spreads on this one were a little bit expensive for my tastes, but again, everybody's a little bit different. Right now, with the indicative of 134.31, we're actually sitting right now at the top of a daily spread. It's got about $14 risk in it, which is not too bad if you like this to the downside. We're literally sitting at the very, very top. Now, a spread is different than a touch bracket. If it does go higher than that, which we are basically right at the ceiling right now, it doesn't close the position down. Okay, it will continue down. And again, like I said, it's about $13 risk right now with about 7 hours, and that would be a play back to the downside here. It would look like this. Okay, right. And again, 14 is not that much. 14 pips. It has an 80 pip ATR, so there's still about 70 pips to the downside. Again, if it does start to push a little bit higher, probably invalidates this trade. But again, at this point, if this stays red, this is the failure to go higher, break to the downside. So I'm actually kind of a fan of that one. I like those smaller risk trades. Let's see. Next one. Again, this is more of a later of the week trade. Dollar Swish. I don't trade it as much. It's retraced all the way back down again. It's actually pushed lower, right? We are in kind of this green area. An area I'd marked off last week, top and bottom, was this blue area. We were in this basing around the gap, and you saw it kind of went back and forth. I want to keep that for you guys. Do you see how much it stayed inside of this gap area and it gapped again? It's just a mess, right? Now we're pushing all the way back to the bottom side. Now, this blue area obviously has been invalidated. I'm just going to delete it right now. There's not really a good area down here. Ascending wicks, a lot of stuff going on. I mean, with price down here, it's, like I said, with the gap, it's a pretty big retrace. Yeah, there's not a fan of this one. Things I'll be looking for, obviously. I'll give you guys that real fast. I mean, I don't mind this to the downside. Not bad here. But besides that, I don't really love anything in this one. It's already made its push back up to fill the gap, but it didn't do it, and it's now coming back down. So for me, there's not really a setup on this one. Last but not least, the dollar yen. So dollar yen last week, remember we marked off this 2 areas. We talked about being in the sell zone. There was a bit of a racetrack. We weren't really worried about it till it got to here. It did bounce once, came back up, touched the zone again for our re-entry, and then collapsed all the way back down to the area. Now, this is the type of short I was looking, and I kept this on there. Obviously, price is all the way down here. We've missed this trade. But I've mentioned this a few times before. I want things to break lower areas. Here's a lower area on the 4-hour, okay? It went through, it broke our target, came down, came back up and retested it, and then broke lower, okay? So I'm using these areas not only as targets, but as re-entry points. When price breaks below, comes back up and retests the zone, and then continues further down. And again, we had this area down here at 109 marked off, and it literally bounced right off the top of it. Right now with this one, I think it's going to depend on what the sentiment is when the market opens. There's always news that happens, over the weekend. Honestly, I think one of the things that's going to affect this one is basically the Mueller dossier. I think that Trump is always considered as being market beneficial. If something's going to happen to him, I think they are going to take a negative spin on that one, and they think that everything's going to swap the other way. And I think that's what will affect this when news starts coming out about that. I'm sure there'll be leaks all week about it. There's no such thing as secrets anymore. So I'm sure there'll be leaks all week in this guy. Right now, we are at this level of basing, right? This impulse correction, and that's where we're at right now. If we continue to break down and we break down below 109.60, then yes, I will be looking to go short a little bit more. That also coincides with this kind of selling area here. Okay, so it needs to go a little bit lower. Actually, probably 109.50 is more what I'm looking for. And again, it would be the break of the basing here, and again, impulse correction, and that would be our impulse move back down, most likely down to this 108, probably 108.80 area. So again, nice push to the downside before we get back in levels of basing. This is another one too that, again, with as much movement as we've had on this one over the last week, if you use a touch bracket on this one, you also would have completed. Again, if you're not familiar with touch brackets, again, go to demo. There are some nice touch brackets on this one as well. 110.12 is the indicative, and you actually have one right now that has a 111.02 ceiling on it. It's a bit far. You have a 110.52. That's about 30 pips, 40 pips from where we are right now. So if price pulls back any more, you could have a potential turnaround somewhere in this area for that one. Okay, but most likely we are going to break the top or the bottom of this one this week. So again, it's a great place for you guys to get practice to trade these on your live accounts. Do it in demo first to get comfortable with them, and then incorporate them in. Like I said, I have some traders that at Major League Forex that are really, really enjoying these things. They've incorporated them in, and yeah, they're always like, you need to talk about them more. They're great. So practice them first. Be comfortable with them before you go live. Don't risk money on them. Again, don't trade something that you don't understand. But again, the current environment we have with the yen pair right now is that it's definitely given us good potential to learn how to do these things in a live environment. All right. So with that being said, that is the end of the Nadex pairs for the charts. So that will conclude us for this week as far as what we're going to do. Again, every week we're going to do these at the same time, 7:30 a.m. If you guys have more questions, you're more than welcome to head over to MajorLeagueForex.com. This is what the website looks like. Click this Discord button. If you guys aren't familiar with what Discord is, it's a chat program that Microsoft created. You can email me at support@MajorLeagueForex.com if you have other questions about things that I talked about. If you're on Discord, you can send me messages to MLFX Bryan number. This is what you need to put in to find me. But if not, just click Discord, get on our channel, and you guys will see me up there in yellow. Thank you guys so much for joining this week. I will see you same time next week. Good trading, and good luck. Take care.